So I want to move on to Intel stock now because about a month, I don't know how long ago, maybe a month ago, you made a quite an interesting video on Intel that you thought there may be some potential fraud going on in the company. I think that was a stock that might be in your demo portfolio as well.
Yes, it is. It is also publicly covered on my research platform, so you can read everything I wrote about Intel. Now, fraud, that was a nice YouTube title, but Intel has focused on accounting to make it look better. So they have said, oh, look, our machines don't make any money, but we think the value of these machines is not 5 years anymore, it is 8 years. And they lowered the cost of depreciation for 4 billion per year, just to make them not lose 4 billion in an accounting year, but to be stable. So they started focusing on accounting instead of their business. And of course, if a business is losing 4 billion or being at zero, it looks much better in the if you're losing money, you look much worse for investors, and then the stock obviously follows. So that was something that it's not fraud, it's legal, but I think it's defrauding investors because it's not really showing the right picture. And your machines cannot be worth more if you're not making any money on them.
I see. So when you sort of see something like this going on in a company, when they're doing like these little accounting changes, what do you think? Do you think, oh, okay, do you just write them off as an investment? You're like, okay, I don't want anything to do with these managers anymore. They seem to be not doing things in the best interest of shareholders, or do you give them a bit of leeway?
You implement what's going on into the risk and reward of the situation. So Intel was a dividend business, cash flow focused business, and then they hired a new CEO who was hired to please Wall Street 2 years ago. And then the presentation said Intel is the next growth story, how they will take back their market share with ADM, NVIDIA, and whatever. They will start the foundry business and everything, and they will be the next growth story. So that was what they were saying 2 years ago in the great new presentations. Fast forward 2 years, revenues are down 50%, and they are not making any more money, they're losing money. So I find it very suspicious that the management didn't know that something can turn, or that Intel doesn't have the advantage it has in the product. So they are starting to do things just again to please the Wall Street trend. And Intel was at, I don't know, 50 when the CEO was hired. Then the stock went to 68 after these great presentations. And after what they said didn't materialize, it went down to 24, 25, and now it is in the 30s. And that's one. Then the second one was this accounting change. Oh, we'll just throw it into one conference call. Next conference call, everyone will already forget about it, but we will improve net income, the bottom line, by 4 billion. Of course, you have to focus on cash flows, but when someone clicks on the stock, he sees P ratio, okay, they are profitable, okay. So all these slight little things make me think that, okay, Intel is there trying to do its best, of course, but the management is also trying to play with Wall Street and please it, which means the next time they say something, I will be much more careful in assessing what they say. They say they will deliver this product by 2025. Will it be 2025 or 2027? That again changes the approach in the calculation of cash flows and everything, because you can't trust them. And I was always saying Intel is, even the management says they will rebound, they will start growing for 2025. And that's the time when you have to look at it. Therefore, it is, I think, with a small position in my demo portfolio, And then I look at it, and then if I can nail the upward trend in the industry, a rising tide will lift all boats, then maybe it will lift also Intel. But the more I follow them, the less I trust them. So even if we come to 2025, at this moment in time, with the three red flags that I already mentioned, it's unlikely I will trust them.
So basically, you would need to see a really good price on that for you to own that business, is it?
I think we always discussed with this semiconductor industry and everything that you have to buy it for a margin of safety at 80% of book value.
80%.
80% of book value. I think it is around 20 or something like that for Intel, because they are investing a lot of money. They have invested 100 billion over the last 5-6 years into production, into everything. And the market cap is less than 100 billion. So there is some kind of book value or machinery value that gives you a margin of safety, no matter what the management does. And that value will do well when there is an uptrend in the sector, which everyone expects to be 2024 and later. So at some point, I feel Intel will be a good buy. But then it's again about waiting for that point.
I see. And so when you say 80% of book value, what does that mean? So the price is below book value? Wait, 80%?
Yes. So I think
0.8 to 1.
Yeah, Intel's book value, and don't know the number by heart, but let's say it's 100 billion.
Yeah.
The market capitalization, the stock value is now 120 billion. So if you want to buy it with minimizing the risk of loss, you have to buy it at 80 billion, let's say.
I see. And then, so that would also account for if their book value is a bit off, if it's overstated, if they struggle to sell some of those machinery.
If there are some impairments or something like that, then always there is some value in the business.